William Albert Ackman is an American philanthropist, investor, and hedge fund manager. In 2020, he was ranked America's 25th richest hedge fund manager with a current net worth of over $2.2 billion US. Although people consider Ackman as a contrarian investor, he considers himself an activist investor. He became a billionaire through operating the Pershing capital management hedge fund that he founded in 2004. While he became famous in the financial world for his short position on the bond insurer MBIA and his rescue of the mall operator General Growth early on in his trading career. But Bill Ackman's career has been a roller coaster over the last several years. Over the course of half a decade, he went from being one of the most well-regarded hedge fund managers in the industry to having a string of well-publicized failures as a result of shorting Herbalife and betting on Valiant. Billionaires are not normally known for their humility, so you know things have gone wrong when a billionaire hedge fund manager has to publicly admit that they were wrong. But that's exactly what Pershing Capital Management founder and chief executive did in a surprising apology he wrote to his shareholders a few years ago. Because of this, we've decided to debunk Bill Ackman's portfolio. Ackman co-founded the Pershing Square Foundation with his wife Karen in 2006. It aims to support innovation in the areas of education, economic development, human rights, healthcare, urban development, and arts. Since its founding, the foundation has committed more than $400 million in social investments and grants. In 2011, the Ackmans were in the Chronicle of Philanthropy's Philanthropy 50 list for the most generous donors, while in 2014, the Challenged Athletes Foundation honoured Ackman at a gala fundraiser at the New York City's Waldorf Astoria Hotel because he helped raise a record $2.3 million. But, though Bill Ackman and his Pershing Square hedge fund were both large winners throughout 2014, the same can't be said for 2015. According to Reuters, Ackman's Pershing Square fund lost between 16 to 20% in 2015. In fact, he even admitted to investors that he made several errors throughout the difficult year. Perhaps the biggest trade associated with Bill Ackman is his conviction short of a health supplement company, Herbalife Limited. In December 2012, Ackman famously made a short bet against Herbalife, an investment that makes money when the stock price falls. Ackman called the nutritional supplements company a pyramid scheme that he thought would eventually go to zero. He spelled it all out in a 3-hour presentation at an investment conference. The trade has been chronicled at length by almost every financial news outlet even to this day, and was famous for an on-air argument between Ackman and Carl Icahn on CNBC, who had taken a long position in the stock. The two traded personal barbs, with Ackman saying that Carl Icahn unfortunately does not have a good reputation for being a handshake guy, and Icahn telling Ackman, "I wouldn't invest with you if you were the last man on earth." Ackman and Icahn buried the hatchet a year later, with both men agreeing to let bygones be bygones during an investment conference in 2014. But their battle about Herbalife wound up becoming the subject of a 2016 documentary called Betting on Zero. In the weeks following his short position, Ackman saw Herbalife shares plunge around 60%, but the company has proven remarkably resilient and has rebounded to its pre-short levels, thus costing Ackman millions in borrowing fees and paper losses. As of February 28, 2018, Ackman has reportedly exited his entire short bet on Herbalife. Originally entered at about $180 per share, Ackman's massive 8.5% stake in the pharmaceutical company Valiant has been thoroughly smashed following accusations of channel stuffing against Valiant. The company was battling a host of challenges, including management mishaps, horrible earnings and guidance slashes, shady conference calls, and the possibility of covenant breaches leading to technical defaults on the company's debt. Ackman gave up on the Valiant pharmaceutical company after deciding that holding onto the company's shares was no longer worth the trouble. On March 13, 2017, it was reported that Pershing Square had sold its entire position, taking a loss of more than $3 billion US. He later said, "While I and the rest of the Pershing Square team have suffered significant losses from this failed investment as we are collectively the largest investors in the funds, it is much more painful to lose our shareholders' money, and for this I deeply and profoundly apologize." In 2007, Ackman started buying shares in the nation's second largest retailer, eventually becoming its third largest shareholder. He argued that Target's shares were undervalued and he had a plan to fix that. He demanded that the company sell its credit card business and spin off its stores into a publicly traded real estate investment trust. But this turned out Ackman had identified the wrong problems and therefore the wrong solutions. During his 4 years of stock ownership, Ackman achieved the role of dissident shareholder, saying that he didn't want Target to become known as a once great company. However, in 2009 he apologized to investors when their Target investment lost 90% of its value. Experts in corporate governance and management said that Target executives are probably breathing a collective sigh of relief. Ian Maitland, a professor of management at the University of Minnesota's Carlson School of Management, said, "One of the complaints directed at Ackman was that at a very difficult time for the company, he was distracting management from doing what they should be doing." Ackman lost an expensive proxy battle against Target in 2009 to add himself and 4 others to the company's board of directors. Altogether, Ackman and Target spent an estimated $21.1 million in a battle that simply became personal. Another misstep in Ackman's career was his activist position in the now defunct Borders Group. After taking a stake in the bookseller in 2006 and boosting his holdings in 2008, Ackman entered into loan agreements as Borders tried to find a buyer for itself. Borders' president Mike Edwards explained that the company had secured $505 million in debtor-in-possession financing from GE Capital and would continue to operate through the court proceedings, but its operations would be diminished by about 30% as Borders would be closing 193 of its 642 stores. Borders failed to remain relevant in the face of increased competition from online retailers like Amazon and its Kindle e-reader and Apple's iPad. Even discount retailers and its rivals Barnes & Noble with its Nook e-reader were providing competition. The company's stocks have tanked along with the economy in 2008 and never managed to recover, going from over $20 in mid-2007 to slightly more than $1 for most of 2010. Ackman tried to convince Borders' board to merge with rivals Barnes & Noble last year, pledging up to $960 in financing according to Dealbook. As the company delayed yet another round of payments in January 2011, bankruptcy seemed inevitable. In 2011, Ackman spent $900 million to acquire a stake in the struggling chain and join the board of JCPenney. Through Ackman's agitation, Penny hired former Apple executive Ron Johnson as its CEO, and the result was an unmitigated disaster. Johnson decided to abruptly end Penny's discounting and create high-style stores within the store. The moves alienated the retailer's core customers and sales plummeted. Ackman fundamentally misread Penny's situation. He thought the company needed a visionary like Johnson, who developed the Apple stores, to quickly reimagine the business. But in truth, Penny needed a CEO who would first stabilize store operations and figure out how to boost online sales. Bill Ackman has had both big wins and also big losses in his professional investing and trading career. Luckily, following an astonishing 58% return in 2019, he continued to handily beat the market in 2020, even as it was roiled by the coronavirus pandemic. At the end of the first quarter of 2020, Ackman's Pershing Square holdings had a net gain of 3.3%, solidly beating S&P's 500's 20% loss during the same period. Though Ackman had considered liquidating his portfolio amid the coronavirus-induced market meltdown, he decided instead on a large credit hedging strategy that turned a $27 million investment into an astonishing $2.6 billion. Ackman's hedge not only paid off, but it was well timed too. Overall, Bill Ackman's done a lot in his trading career. He's made a few mistakes along the road, but overall he's made very wise investments and he has continued to make a profit over the course of his career. And that's probably why he's still one of the most talked about names in the investment industry. But that's it for this video. We hope this video has helped you get an insight on Bill Ackman's portfolio. If we did miss anything out, then feel free to leave a comment down below and we can leave a discussion down there. But also leave a comment on what you would like to see a video on next. But other than that, thank you so much for watching. If you did enjoy it, leave a like and subscribe for future content, and we'll see you in the next debunking video.